Good morning, folks. I hope you're doing well, and welcome to this morning's video. So it is Friday, the 26th of July, and I have two pairs on watch. Those are Euro dollar and Euro pound. So Euro dollar, as before, I'm looking at this because on the higher time frames we have broken below. Okay, we have broken above this higher time frame liquidity point here. The kind of liquidity point which on the higher time frames we usually see people caught the wrong side of the market. We usually break above, move to the downside, and then follow through from there, so to speak. Okay, we can see that perhaps we have the start of an evening star formation on the weekly, but you can see from how this active weekly candle, the one that's open at the minute, is concerned, that does not look very convincing in terms of a move to the downside, but that could change by the end of the day. Okay, if we just zoom down a little bit, zoom in, you can see as I said, we broke above there. Let's try that again because now all the alerts are going to go off. So as we can see there, we broke above and then fully retraced to the downside. We completely retraced all of that candle. Okay. We've had the impulse correction continuation confirming the move to the downside. If we just zoom in, as I said yesterday, we have this reversal structure there. Okay, we have the middle section within it, 1, 2, 3. You can even see on the 4 hour, we have this 1, 2, 3 last leg. All of this making it highly likely that this is just people here getting caught the wrong side of the market, people buying here. Okay, it comes down. As I said, many of them would have seen that as a retest, and then they get completely washed out, most likely because they don't understand how to read structure, many of these people, okay? And of course, if you're of the belief that resistance becomes support once it's broken above without understanding how to read price action and the subtle clues with which it leaves, then you would try and get long here, and then you will get washed out the majority of the cases. The majority of the times, as I've said before, nothing happens all of the time and nothing happens none of the time, and that's difficult for a lot of traders to understand because they don't have the probabilistic mindset required. Okay, to be able to trade effectively, you can see here that we had this structure here. We dropped out. We had a little correction there, another one underneath it. Price then comes up to that area in the form of this 1, 2, 3, taps into the high, pushes to the downside, leaves a little footprint there. We wick to the area but not through it. We come back up in the form of, this is a bit clearer on the 15-minute chart, but we come back in the form of a reversal structure, tap it, move to the downside. Okay, so just analysing that since I've got a bit more time. Now, the base of the structure, as I said yesterday, is often where we either form deeper pullbacks or if we're going to move in one direction or the other, the top or the base of a structure is typically where we would do it. Okay, so the base of this structure is here. Okay, now we didn't tap below and move to the upside, which can happen at the base of a structure. It doesn't make sense why we would do something like that, but it's possible that could happen. Instead, what's happened is we've broken below the low of this structure multiple times, and price has not found enough liquidity to send it to the upside. So I'm satisfied that this is an impulse correction continuation to push lower. And if you remember in yesterday's video, I said to you that I wouldn't be looking for. So we had this, we kind of had this correction here and the origin of all of this. So we had this little structure here. Price came back up, it left a footprint, and then we corrected sideways. We tapped above that, moved to the downside. And one of the reasons I said I wouldn't be looking to get short here, if you remember, if you watched yesterday's video, is because we left a gap. We left a near miss there. This high here, near miss to that high, which happened to be the retest at the back end of the previous low. Okay, so that's a place where, especially when this move was sharp move up followed by a sharp move down. We had a sharp move down followed by a sharp move up. Okay, and this as well was a sharp move. So it seemed logical to me that we would tap into that high, which this high near missed too. And the clue for me was in here. Okay, so we had this correction here. We had this structure here, and we had, and feel free to watch yesterday's video, we had the sharp move there, we had the near miss to it, we tapped into it, price did not find enough liquidity to commit. Okay, sometimes, and this will be relevant in a minute to the entry that I'm looking for today, sometimes we come back up for a scoop double top and then we drop after these 1 2 3s, which often have a near miss. If that doesn't commit and we come up again to form another a three touch move after already forming one, that's a big clue that this is not going to commit and this is not what you think it is, because we've gone from a correction into a structure, which, like what price is trying to communicate is that it's not found enough liquidity to send it to the downside, because it keeps trying and none of these structures are committing. So what's likely to happen, and I did say this in yesterday's video, and this is why one of the reasons why I wouldn't take this trade, is that you'd like to be tagged in, tagged out, price comes up, this becomes a middle section, which is exactly what happened. Okay, and then what price is effectively trying to do, so it breaks below here, washes out the liquidity that was there, and perhaps at that little inflection point there, and it's moving to the upside because it didn't find enough liquidity for the sell to actually play out. So where is it actually looking for liquidity? Well, probably at this high, which this high near missed too. Okay. And what happens? Said, I'm not, I'm not one of the world's, I am one of the world's best traders. I'm not, there's much better traders than me out there though, and better traders within our community. But I know what I've seen. Okay. So sure enough, we tap into this area, we tap into this high, okay, and break just above that, tap into that high, which I said that we would likely tap into, and we push to the downside aggressively. However, if you look at what price has done since, okay, so last night when I did my forecast, I was actually looking for, and as I always say, it's not about being right. I was looking for this, okay? So I did my evening forecast last night. I was looking for a three touch like that, 1 2 3, and I would have looked to get short. However, what's price done? It's communicated that it didn't find enough liquidity at this sharp high to send it to the downside, okay? And instead it's broken up and it seems to be forming a new structure. So what is price doing? Well, price is doing at this moment in time, unless it shows me otherwise, price is doing one of two things. Um, either this is just a bit of a pullback play where we scoop back up like that and then drop. Okay. These, we don't trade pullbacks like that because they're difficult to time. You can't really time your entry. You could, in theory, if that was a pullback, look for an entry under here. But for the same reason I said I wasn't looking for that trade yesterday, I wouldn't be looking for something like that because I wouldn't have much room to manage it to the low. If we just measure how many pips we'd have from there to there, yeah, you'd have about 16 pips. So if I was to look to get short there, for example, let's try that again. And as I said in yesterday's video, you'd literally only have, well, you'd have about 1.6 to the low, but you also have to consider that the 90% area is where price can pull back deeply, and the 90% area is there, which will give you about 1% to work with. And I don't, as I said, with my busy schedule, I'm not able to manage trades like that, so I need to be higher up in the run. So what is price doing? If it's not a pullback and to then drop, what is price doing? Well, what it could be doing, as I just mentioned a moment ago when I was analyzing this structure here, that little mini structure. Okay, so if we just look at the structure now, we have this 1 2 3, which tapped into that inflection point that I just showed you on the 15-minute chart, which was the retest at the back end of that wick. Okay, we have the 1 2 3 with a 1 2 3 middle section that pushes up and then pushes down. Okay, the last line in the sand for me is, as I said a moment ago, that sometimes we get a scoop double top in structures and then we go. Okay, so if we don't commit from here, then this is not likely not the trade that we think it is. Okay, in my experience. Okay, now the question I ask myself is, why would we come back up for a double top? Well, if we just zoom in, the question I ask myself alongside that is, where is my trade thesis wrong? Okay, Well, my trade thesis wrong is wrong if where is the line in the sand? Where is the last line in the sand that price commit to for this short move to actually, be a short move? Okay, well, it would be the retest at the back end of all of this, because we have a lot of volume here. Okay, so we have all of this volume here. And the only thing we haven't done is we haven't tapped into the back end of that. As I said, we don't trade retests as such. We do look for price to retest certain things, but just looking for one candle, which is what a lot of people do when they're looking for retests, isn't very it's difficult to time a bit, just as with pullbacks. Okay, so what I'm looking for price to do is I'm looking for price to come back into that area of value, right? And I will assess what it does if it does so. If that'll make sense in a second. What I mean by that is if it taps into this, right, and it breaks a little bit higher and retests the back end of that, then pushes down. And because we've already had a completed piece of structure there, I'm not looking for a risk entry from the top, because this could be something even more complex. We might move down. Okay, you look to get short. After a rejection, it does something like that, then taps into the area. Of course, that wouldn't necessarily be ready by the end of the day. Then it drops, and we've gone from a correction into a correction and then drop. So what I'm looking for in this instance is I'm literally just looking for price to tap into that area of value again, push down, and then flag, and then I would look to get short on the break of the flag or within it. And if we do tap into that area again, it's highly likely that price will move a little bit higher to tap the back end of all of that before moving to the downside, because price has already tried to communicate with us that it did not find enough liquidity to send it to the downside. Well, that's how it appears at the minute. So it would probably need to retest the back end of that to move to the downside. And then what I would do is I would manage it. I would have enough room to manage it to the low of the structure, which would be there for something in the region of 3.5%. Okay, my target would be down there, the base of all of this. The base of this structure, which just happened to have a sharp move at the end, at the start of it, implying liquidity, especially when it's the retest of the back end of all of this volume, which you can see there. Okay, and then I would, if we just get that off, I would set a take profit. So I would measure from the range. So the range would be there then. I'd set a take profit there. When the 90% area is where price can often pull back deeply, even if it does continue in the forecasted direction. I'd set a take profit there. I'd trail my stop loss at the same time, and that's what I'm going to be looking for from euro dollar. Okay, so we can get that off the chart now. I'm just going to leave that like that. We'll see what price wants to do. Okay, price will show its hand one way or the other. So euro pound. Okay, if euro dollar is moving to the downside, there's different currency pairs involved, but then it does ever so slightly increase the likelihood of euro pound moving to the downside if we start to see extreme weakness across the board on the euro. Okay, but this structure here, we just look at this. How long have I got left? We can analyze this from top to bottom. I mean, we've got all of this. We've got this high here. We break above that by way of this structure here. We have a little scoop double top. Price taps into that, moves to the downside, little structure here. Price leaves a footprint, which is the retest at the back end of that. We near miss to it. We tap into the area by way of a reversal structure, move to the downside. Slightly strange price action here, but it kind of retests the back end of that. Okay, we leave a footprint there. We tap into it by way of a reversal structure with the middle section there. We get that strange scoop again. Okay, so price is moving down quite correctively all in all, but this is euro pound. That's how euro pound moves. We then consolidate. Through this low, suggesting that there was not enough liquidity here to send price to the upside. And sure enough, we move to the downside. We come back up. We retest the back end of all of this. Okay, and we move to the downside. Let's just get all of this off the chart. There we go. What have we done since? We have price is coming up. Price tapped into this low But what did it do after it moved away? Okay, did it move up in the form of tight corrections and then move to the upside to tap into this high? No, what it did, it moved up in a non-progressive way. It moved up and then it moved all the way back down to here, and then it moved up, suggesting that this might be, if we just zoom in, so you might be thinking, yeah, but there's momentum. Yes, there's momentum, but we have momentum leading up to an area of value, which is just about visible on the daily chart, okay? And if we look at this, so price has moved up from this area in a non-progressive way, suggesting it didn't find enough liquidity here to send it to the upside impulsively, suggesting that this is just a consolidation to push lower, okay? And all this is, what we're seeing here, is people being caught the wrong side of the market. And the clue is that, what do we have? We have an impulse, a more corrective move down, and then a continuation, right? And if we just measure the length of these impulses, and we assume that the continuation leg out of the impulse correction continuation is of a similar length, we've fulfilled that move now. So this is likely just people, the buyers, getting caught the wrong side of the market. Okay, and why? One of the reasons why price is likely broken above is because it's likely retesting. Let's try that again. It's likely retesting the back end of this because there was a lot of volume there. Okay, that was built up within that correction. So what I'm looking for today, and you can see the middle section there, 1, 2, 3. We have the 1, 2, 3 there. Okay, and we kind of have this structure which taps into that area and retests the back end of that. So what I'm looking for today, okay, and you might be thinking, well, surely this looks cleaner than euro pound, than euro dollar. Well, it does on the lower time frames, but I'm not prioritizing the lower time frames. I'm prioritizing the higher time frames, which is what the professionals are doing. And one of the reasons that I'm looking for the shorts, just to touch on it before I forget, is because we have down here, we have this very, very sharp move there, okay, that caused a big rally to the upside, okay? So that's likely where there's liquidity. If there's liquidity there and we break above here and break back in, break above here and break back in, it's likely that we're coming down to take out this very, very sharp move there. So that's the theory. This also, just to touch on it, this could get messy because we might get something, like that, which gives us more of this reversal structure like that. So I wouldn't be surprised if we also break out and get something a bit more messy that does something like that, but we shall see. But what I'm looking for today from this pair is, and we also have to remember, one of the reasons that might happen is because we may be forming a little buy structure here. You can see that wick. We may near miss to that, come back up, come back down, tap into it, and then this is actually a move to push higher. I wouldn't rule that out. But that may only be temporary because we may be forming some kind of reversal structure to tap into that higher time frame low that I was talking about. But where today's forecast is concerned, things that I'll be looking for that may shape up by the end of the day, I'll be looking for a break back below this area of value, followed by a continuation, either a 5-minute or a 15-minute continuation, and then I will be able to manage it down to this low, something in the region of 3%. We'd have 4.5% to that low there. Okay, I wouldn't be set using the mechanical management rule there because my minimum is 5%. The structure has to yield me 5% in order for me to do that. So what I would do is I would measure from this high down to that higher time frame liquidity point, which I just showed you. And then I would set the take profit there for something in the region of 7.5%. And then I would trail my stop loss there at the same time. And that's what I'm going to be looking for today on Euro Pound, folks. As I said, I'm not a fortune teller. There's many better traders than me, but I am getting very, very good at this now. And I know what I've seen. So it's not a case that, what happened yesterday on Euro Dollar that I actually knew what was going to happen. I had just as little clue what was going to happen as any of you watching. But what I do know is what I've seen in the past, because I'm not trying to get rich quick. I've blueprinted all these structures, all the things that I've seen in my mind. So when you've seen enough of them, you kind of anticipate what's going to happen next. In the same way, if you're a driver and you get in a car, you can anticipate how much to turn the steering wheel, how much accelerator, how much gas to put on the pedal. You know these things instinctively because you've blueprinted these things in your mind. Anyway, have a great day, folks. Have a great weekend, and I'll see you again in the next video. And of course, if I do place a trade on any of these pairs, I will bring you a trade recap in that next video. Have a great rest of your day.